In this session, we will be focusing on the preparation of a cash budget, and the question goes like this. A company is expected to have 32,000 cash in hand on 1st April 2020. It requests you to prepare a cash budget for 3 months, April to June 2020. The following information is supplied to you. They have given us a table which talks about sales, purchase, wages, expenses. Now, each of these costs, it pertains to a specific area. So for example, sales is nothing but your cash receipt. Purchase, wages, expenses, these three areas, it deals with your cash payments. Along with this, they've also given you some additional information. Period of credit allowed by suppliers is 2 months. Credit allowed to customers for credit sales is 1 month. Delay in payment of wages and expenses by 1 month. Income tax of 28,000 is to be paid in June 2020. So using these pieces of information, we will have to go about preparing the budget. Now, how exactly does these pieces of information apply to us? Period of credit allowed by suppliers is 2 months. Now, remember, suppliers are giving us credit, and the credit is for 2 months. So this piece of information collates or relates to which aspect? This will deal with purchase, because our suppliers are giving us a credit. Okay? Our suppliers are giving us a credit, and they're giving us a credit of 2 months. Credit allowed to customers for sales is 1 month. Okay, now which item does this deal with? It deals with sales. Delay in payment of wages and expenses is by 1. So that deals with wages and expenses. Along with this, you also have income tax payment of 28,000, which is due in June. Now, which are the 3 months for which we have to prepare the budget for? It's for April, May, and June. Now, we have to, in this table, they have given us the outline of our anticipated receipts and anticipated payments. We have to fit this into a cash budget. And when we are fitting this into a cash budget, we also have to take into consideration the different aspects such as how exactly does these pieces of information relate with us. So for example, period of credit allowed by suppliers is 2 months. What does that mean? If you have carried out a purchase this month, you're settling the payment after 2 months. If you have carried out a purchase this month, the payment is going to be settled in 2 months. Which means in the month of April, you will be talking about the purchases that you have made in February. February, you had made a purchase of 44,000, but you're not settling the payment immediately. You're settling after 2 months. So when would the 2 months be? 1 month, 2 months, and then you would be settling it in April. Purchase that you have carried out in March, 56,000, you would not be settling it in March. Instead, you'll be settling that after 2 months, which is 1 month, 2 months, you'll be settling it. This goes on like that. Let's look at the next piece of information. Credit allowed to customers for sales is 1 month. So which item does this deal with? It deals with sales. And how does this impact you? If you have sold some good to a customer in February, when is he settling the payment? He's settling the payment for you in March. If you have carried out some sale in March, when is the customer settling the payment? He's going to settle the payment in April. And this is how it goes on. Okay, this is how it goes on. So now let's start off with the preparation of cash budget. Let's quickly prepare the format together, and let's start off with the preparation of cash budget for this particular question. So I have prepared the format over here, and at first, let's look at this one by one. We have the opening balance, then we have the next section, which is cash receipts. Then we have to calculate total cash receipts. Then we have to check out total cash available. Then we have cash payments, and then we have to deal with the cash payments. And then finally we have to compute the closing cash balance. So let's go about with it. What I would advise you is to fill in the format with the items at first and then go about tabulating. So what are the cash receipts that we have? The cash receipts that we have is sales. Okay, the cash receipts that we have is sales. So cash receipts that we have is sales, and let's look into this. And also, in the month of April, your customers would be settling the payment for March. So how much is March month sale? March month sale is 80,000. So here you would be getting the payment for the month of March. Now, how do we know this? Because it is clearly given to us in the question that there is 1 month credit period which is allowed to us. Okay, there is a credit of 1 month which is being allowed to us, and that is how we know this is applicable. Okay, now let's move on. In the month of May, your customer is settling the sale for the month of April. So April sale is how much is that? That is 96,000. June, he will be settling the payment for May, which is 1 lakh. Okay, so that has been completed. Now let's look at the payments next. Now, what are the payments that we have? The payments that we have here are purchases. Let's write that out. We have purchase as one of our payment. Then what else do we have? We have wages. Okay, then what else do we have? We have expense, and then we also have income tax. Okay, we also have income tax. Okay, now here, very important thing that you have to remember is in the month of April, you are settling the purchase for the month of February. In the month of April, you're settling the purchase for the month of February. So how much is the purchase for the month of February? It is 44,000. Then in May, you're settling the purchase for March, which is 56,000, and here it is 60,000, which is the payment for the month of April. Now, wages, when it comes to wages, there is a delay in payment by 1 month. So here in the month of April, you are settling the payment for, you're settling the wages for the month of March, which is 9,000. In May, you're settling the payment for April, which is 9,000. And here you're settling the payment for May, which is 11,000. Then similarly for expenses, how much is expenses? In the month of April, you're settling the expenses for April. Here you're settling the payment for March, the month of May. You're settling your expenses for the month of April. April, your expenses are 7,000. And in June, you're settling your expenses for, which is 9,000. Then you have income tax, and income tax you have to pay in June, and the income tax is 28,000. So with this, we have prepared, we have fixed in, or we have fit in all the items or expenses into our format. Now we have to go about calculating. So total cash receipts, we have to add up all the cash receipts that we have, which is 80,000, 96,000, and 1 lakh. Then we have to calculate your total cash payments. So cash payments, you have to add up all these 4 expenses, and that we have done. For month of April, it's 59,000. Month of May, it is 72,000. And finally, here it is 1,08,000. Now, let us go about calculating the other aspects. Now, what we have to calculate is, we have to fit in the opening cash balance. We've been told that the opening cash balance for April is 32,000. Okay. Now, how do we calculate total cash available? That will be opening balance plus total cash receipts, which makes it 1,12,000. Now we have to calculate the closing cash balance. How do you calculate closing cash balance? That is total. That is A plus B minus C, which makes it. Here it is 53,000. Okay. Now, what you have to remember is the closing balance for the month of April is your opening balance for the month of May. Okay. Similarly, you have to calculate the total cash available, the closing cash balance, and what you have to remember is the closing cash balance for the month of May will be your opening cash balance for the month of June, which is 77,000. That also we have calculated, and we have estimated the cash balances. So in month of June, when you're closing, you're expected to have a cash balance of 69,000. This is how we go about with the preparation of cash budget. Okay? This is how we go about with the preparation of cash.